Just a few short years ago, China was the world's most exciting growth story, constantly beating expectations. And India was the growth story that never seemed to play out the way it was supposed to.
Well, India's had a long record of disappointing growth after independence, until it began to make reforms in 1991. And even then, its growth pace was relatively slow on a comparative basis to other countries.
But in 2015, things have changed. China has slowed, along with much of the rest of the world, save the United States and India. The country has a new prime minister, easing monetary policy, stronger finances from a decline in oil prices, and a stock market that has room to grow. Investors are talking about growth numbers that outstrip nearly every major economy in the world. Is this finally India's moment?
He's not trying to come up with big bang measures that solve everything, because there are no such silver bullets. I think he's addressing both micro issues that affect the larger population in India, address issues like poverty, financial inclusion, which are really critical to uplift the whole country. At the same time, he's steadily addressing the macro issues in terms of infrastructure, in terms of shoring up labor laws, in terms of land reform, so on and so forth, which are very complex issues. And finally, he's addressing the bureaucracy. I believe he's injecting both confidence, but also spurring them into execution mode by managing them quite tightly.
With inflation expectations down significantly at the end of 2014, the country's central bank took the opportunity to reduce rates, putting India in a cyclical sweet spot. Capital expenditures are set to rise, while manufacturing numbers are trending higher.
Well, I think if you look at in the short term, obviously a country like India is going to be a great beneficiary of a stronger dollar and a weaker oil price. Obviously, it imports a lot of its oil, and therefore this has a direct impact on its overall GDP.
India imports 80% of its oil requirement. We are the third or the fourth largest oil importer in the world. So how we make use of this windfall gain in the sharp drop in oil price is very, very important. The government has moved, they've reduced subsidy. I think they've desubsidized petrol, diesel, but there's still subsidy on kerosene, there's still subsidy on LPG, the cooking gas. The important thing, I believe, is to streamline the subsidies.
The premium does exist, but given that India is going to be a much higher growth economy over the next several years, in fact, the premium used to be 80% in 2007, it was 40% in 2010. Right now the premium is just 12%. So I think there is a lot of room for the premium to expand. The good growth sectors and stocks will still be in consumption, private sector banks, and also IT and healthcare.
My view is that India, among all the emerging market countries, in the next 3 to 5 years is going to be the leading grower and will occupy its place in the sun, because other countries have slowed down. Brazil, China is going to have trouble recreating its previous growth level as it goes through its adjustment. So India is going to have a real advantage, and I expect it to move back up into the 7, 8, 8.5% range.
In pension world, we think in much longer time horizons. The way our CEO likes to talk about it, we don't think in terms of quarters, but quarter centuries. So when we think about opportunities, we're thinking about the next 25 years, not the next year. And in that kind of a context, where do we see the biggest opportunities relates particularly to emerging markets, and markets like India and China, where they're already becoming substantial economic powerhouses.
The newly elected government in India has a strong mandate and a majority to introduce structural reform. India is a beneficiary of the low oil price. Those dynamics will mean, in our view, that India is clearly the better place to be invested.